A $20 billion bid for Australia's largest hospital operator. New South Wales and Victoria drop COVID restrictions with isolation rules becoming much less strict. And Netflix's disastrous drop in subscribers. It's Thursday, the 21st of April, 2022. Welcome to Fear and Greed, Australia's most popular business podcast. I'm Michael Thompson and good morning, Sean Aylmer.
Good morning, Michael.
Sean, it is a big day today. Every Thursday now is a big day, really. The latest episode of Safe Word by Fear and Greed is out right now.
Yes, Michael, this is our lighter weekly show where we deal with some of the really big issues in business. This week, for example, we cover everything from swearing at work to what you can learn from the work experience kid. Plus, we have a safe word, of course, so we can bail out of the conversation when it gets a bit weird, which it does.
Yeah, it does. And it certainly does in this particular episode as well. And look, today's safe word is jelly. So there's a good story behind that one. So make sure you have a listen. Search for Safe Word by Fear and Greed. You've got to search for the whole thing. Safe Word by Fear and Greed. Look for that on your podcast platform. Make sure you hit subscribe or follow and you will get every episode every Thursday when it comes out. It is definitely worth a listen. And Sean, immediately after this episode of Fear and Greed right now, stick around as well for your chat to Jordan Fogarty from digital marketing business B Media.
Any conversation that you talk about non-fungible tokens, NFTs, and the metaverse, and you understand it, is a good conversation, which is exactly what happens with Jordan today.
Yeah, it is a good chat. That's coming up a little bit later on. But the main story this morning, Sean, big deals back in the headlines after a consortium led by global private equity fund KKR made a $20 billion bid for Ramsay Health Care.
Yes, Michael, the offer for the country's largest private hospital operator triggered a 24% jump in Ramsay's share price to more than $80 a share. Now, that's still below the bid price of $88 a share, and it's all in cash. Including debt, the bid is valued at $28 billion, and the consortium includes several local superannuation funds, Hester being one of those, possibly Australian Super. It would certainly be the biggest deal of this year if it goes ahead.
What did the board say, the board of Ramsay, Sean?
Well, it said the talks were preliminary and there's no guarantee it will go ahead. Certainly, it hasn't given its tick of approval just yet, though media reports suggest the company's biggest shareholder, which is the Paul Ramsay Foundation, is supportive of talks. Now, Paul Ramsay Foundation owns nearly 19% of the listed company. Speculation yesterday was very much that this deal is on the table, and in fact, most people think this will be done in one way or another. Just really interesting. Ramsay is a really interesting company. Now, it was founded in 1964 by Paul Ramsay, listed on the ASX in September 1997. It operates 72 private hospitals and day surgery units in Australia. It's also got businesses in Malaysia and France. An offshoot of it is the Paul Ramsay Foundation that was set up in 2006 by Paul Ramsay and his wife. It continued after Mr. Ramsay died in May 2014. The Paul Ramsay Foundation is currently the largest philanthropic donor in the country and provides millions or tens of millions of dollars each year to charities.
It's pretty remarkable, isn't it? So, Sean, I'm curious, why are private equity and super funds so interested in healthcare?
Well, it's a very attractive place to park money, especially if you're a super fund. It's got long-dated assets. That means long lifespans. It's got stable returns. It's a growing sector, and it's actually supported by plenty of government money. That's the type of thing that superannuation funds look for. In some ways, these healthcare assets are a bit like infrastructure assets. And as we saw with the sale of Sydney Airport earlier this year, super funds like stable infrastructure assets.
All right. So what happened on local and global markets yesterday?
Well, the S&P ASX 200 closed up slightly yesterday to 7,569 points. It surged at the opening, then fell back through most of the day. Now, among the large caps, the iron ore miners underperformed, the banks were mixed, and Goodman Group and Wesfarmers both rose more than 1.5%. The worst performers were wealth platform Hub24 and gold miner Regis Resources, which both lost more than 6%. In the US, real bond yields turned positive for the first time in 2 years. That means that when you take inflation into account, investors in bond yields are ending up better than where they started. Now, for the past couple of years, inflation was higher than the returns from the bonds. That's now reverted to how it should be, and 10-year US bonds are now yielding near 3%. That makes them much, much more attractive to investors. Before I go, Michael, a barrel of Brent crude has fallen back below $110 a barrel. Still very high, but at least not where it was a few weeks ago. Gold's also lower, worth around $1,940 an ounce, and the Aussie dollar is trading at just a bit over 74 US cents.
All right, we'll be back in a moment with the rest of the day's business news. Sean, the premiers of New South Wales and Victoria yesterday announced a further lifting of COVID restrictions from Friday night.
Yes, in New South Wales, household contacts will no longer have to isolate for 7 days if they're showing no symptoms. And close contacts will need to have daily rapid antigen tests and wear masks indoors, but otherwise be free to move around the community. There remains restrictions in place around some areas, such as aged care homes and hospitals. Vaccine mandates for critical workplaces will be lifted though, but masks on public transport, planes and in airports remain mandatory. Now in Victoria, it's no longer a requirement to show proof of vaccination. Masks have been dropped for primary schools, and close contacts won't have to quarantine, provided they wear a mask indoors. And like New South Wales, unvaccinated overseas arrivals will no longer have to quarantine for 7 days.
Sean, I bet there's plenty of people happy about the changes.
Yes, not the least being businesses in the retail and hospitality sectors. Hopefully the changes will help ease the chronic labour shortages in the market at the moment. Prime Minister Scott Morrison welcomed the changes, saying things were getting back to normal. He's right there. Now, caseloads in New South Wales and Victoria have fallen in recent weeks. Sort of the 7-day average a couple of months ago in both states was around 40,000. Now it's about 13,000 in New South Wales and 9,000 in Victoria.
All right. Now, what's the latest election news?
Well, the two party leaders squared off last night on Sky for what the Prime Minister called the first debate between the two, though it wasn't officially a debate. Morrison focused on the economy and security, no surprises. Albanese on social issues such as aged care. Michael, I'm not hazarding a guess at this point about who came across best. That's very much in the eye of the beholder, I suggest.
I think you might be right there.
Meanwhile, the Liberal candidate for Warringah, Catherine Deves, has become more than a sideshow in the campaign because her anti-transgender comments are splitting the Liberal Party. More moderate members want her disendorsed, but Prime Minister Scott Morrison is backing her, saying Australians are getting pretty fed up with having to walk on eggshells. I'm getting pretty fed up with that whole debate, to be honest. National Party leader Barnaby Joyce said the coalition will back the fossil fuel industry, even if it's unpopular. And Anthony Albanese was highly critical yesterday of the government's efforts to prevent the signing of a deal between China and Solomon Islands, saying it was a foreign policy failure on our doorstep. Now, Solomon Islands, long a supporter of the US, yesterday morning signed a security pact with China.
Sean, how about this one? Whitehaven Coal, once unloved, said record coal prices mean revenue is surging, though it will have to work at full speed to meet production guidelines, given all the poor weather the company's mines have experienced.
What a difference an energy crisis can make, Michael. Whitehaven's share price hit a record high yesterday and is 5 times the level of 20 months ago. Now, back then, no one wanted to invest in coal. Whitehaven had huge debts and the future looked glum, and that's probably being nice. But oil and gas prices are soaring, and so too is Whitehaven's share price. Now, it does raise the interesting issue of whether people who invest in sustainable funds and sustainable assets, so screen out oil and gas companies like Whitehaven, among other things, are underperforming. They were all the rage in 2020, and even 2021, sustainable investing outperformed. But they've had a shocker this year. Now, of course, I was going to say actually 3 months does not make a summer, but actually 3 months does make a summer. So 3 months does not make a long-term investment. The point being that you may want to invest in sustainable funds and at certain times you will underperform. But if you believe in the long term it's the way to go, then stick to your guns. See a financial planner, of course. But at the moment, those funds are certainly underperforming some of the energy funds.
I love your attempt to coin a new phrase there. 3 months does not make a long-term investment. It's not as catchy as the original.
No.
So we might send that one back to the marketing department, but I mean, the sentiment is right. So anyway, Sean, moving on. Media giant News Corp looks to be getting into Australian sports betting.
Yes, the company has always had an interest in the gaming sector, and News is joining a consortium to launch an online wagering brand in Australia. The consortium includes Australian betting industry executive Matthew Tripp and a Las Vegas digital sports gambling investment firm, according to reports in news media outlets. While old media companies have struggled to grow revenue, shall we say, gaming sites have done very, very well. Now, News will promote the new site via its media assets, including the newspapers and websites, and of course via Foxtel and Kayo, in which it part owns.
Sean, mining giant Rio Tinto has warned of a challenging first quarter of production.
Yes, investors never like the word challenging, really. While Rio still plans to produce about 330 million tonnes of iron ore this calendar year, it certainly has some work to do on its operational performance and, of course, around workplace issues. Rio said component failures at newly built mines had restricted production. Its share price fell nearly 3% after the quarterly report yesterday.
Sean, AGL Energy has suffered an electrical fault at its large Loy Yang A coal power station. Now, that station supplies about 30% of Victoria's electricity, and it could remain offline until August.
Yes, it means it won't be operating in peak winter season. Now, that sent the share price of AGL down nearly 7% yesterday, though it recovered somewhat. What the outage does do is add to those concerns about whether companies like AGL will just keep repairing coal-fired generators given the push to renewables. Now, Loy Yang A isn't due to close down until 2040, so obviously it will be repaired. But every time a company like AGL or Origin, one of those big generators, has to spend huge amounts of money on a fossil fuel station, it probably just thinks twice about how much it wants to spend, given the future is renewables.
Sean, Papua New Guinea Prime Minister James Marape has called for criminal sanctions to be pursued against UBS in both Australia and in PNG.
Yes, that's over the investment bank's role in lending $1.3 billion to the Pacific nation to invest in the ASX-listed company Oil Search. Now, Oil Search operates in PNG, but after the government invested, its share price tumbled along with the price of oil. The PNG government lost about $400 million on the deal, and UBS was one of its advisors. That's all the background. Now, Royal Commission into the deal released its recommendations earlier in the week. It included a 10-year ban on UBS Australia doing business in PNG, a 5-year ban for the Australian unit of law firm Norton Rose Fulbright, and referral to the matter to ASIC, the corporate watchdog. Mr. Marape also said UBS should pay back the money it overcharged PNG, which the Commission estimated was $175 million. There is a lot more to play out on this story.
Wow. And Sean, another update on a pretty remarkable story from earlier in the week. There's been a settlement in the case against a Deloitte director over an alleged fraudulent scheme in which he claimed at least $3 million in work expenses, which were used to fund his lifestyle, including a hot tub.
That is an expensive hot tub, Michael.
It sure is. That is one fancy hot tub. And just the presence of a hot tub in that story just makes it even better, doesn't it?
Absolutely. I mean, there are all sorts of other things like art, sculpture, watches and clothing, but I like to focus on the hot tub specifically. Anyway, Deloitte will now seize and sell hundreds of items owned by now former Deloitte director Paul Quill under an agreement signed off by the federal court. No findings were found, so Mr. Quill certainly hasn't been found against, but he has agreed to repay the $3 million in work expenses.
All right, a couple of short stories this morning. Sean, Bega said its COVID-related costs this financial year had risen to $40 million and lockdowns in Shanghai were damaging delivery schedules.
Yes, it was also affected by floods in Queensland and New South Wales. Its share price ended the day up 1%.
And Santos says it will buy back about $340 million in shares.
Yep. CEO Kevin Gallagher reckons the oil and gas giant's share price is undervalued, so will buy back shares. Now, its share price fell back more than 1% yesterday, despite that announcement, but it is up 24% so far this year.
All right, moving on to overseas news. China has kept its prime interest rates unchanged.
Yes, and that's despite expectations that the world's second largest economy would cut, not raise, but cut rates to stimulate flagging growth hurt by lockdowns. Now, China has been cutting rates, one of the only economies in the world to do so. Given what's happened in Shanghai over the last 4 weeks, it was expected to cut again, but it didn't. Meanwhile, the International Monetary Fund yesterday cut its growth forecast for China from 4.8% to 4.4%, and economists expect the People's Bank of China to cut rates at some point in the future, but maybe Chinese authorities know something we don't.
Okay, and we mentioned this one at the top of the show, Sean, but Netflix appears to have hit a wall. It lost 200,000 customers in the first quarter of this year. That's the first time in more than a decade that Netflix has lost subscribers in a quarter.
Yes, so that's a net number. Now, Netflix forecasts it will lose another 2 million customers in the current quarter. Shares tumbled 23% in after-hours trading. Some of the numbers out of Netflix were huge. Apparently, 100 million households use its service but don't pay for it because of password sharing. Mind you, it does have 222 million subscribers. There's much, much greater competition now, Netflix said. Think Disney, Amazon, etc. And Netflix also had to dump 700,000 viewers in Russia when it pulled its service there, but it also lost 600,000 in North America, the US and Canada. So between Russia, US and Canada, it lost 1.3 million viewers. That is massive.
It's pretty incredible when you think that in the last year, Netflix has actually then been home to the most streamed show of all time on Netflix with Squid Game, which was streamed like billions of times.
Well, interestingly, the market where Netflix is actually doing best is Korea.
Really?
And it's one of the few markets where they actually added subscribers. Squid Game's being one, and then there's another show at the moment, the name escapes me, but that's a huge hit in Korea too.
Oh, there you go. All right. Now, up next is the Fear and Greed Daily interview with Jordan Fogarty from digital marketing business B Media.
Yes. So Jordan gave us a 101 on the metaverse and on NFTs, non-fungible tokens, and how blockchain works into that. But it evolved, and it was really interesting conversation about how businesses can market into the metaverse and NFTs. And it's kind of, I think he called it Web 3.0. So Web 2.0 was all about using social media. Web 3.0 is businesses using the metaverse to market its products. Really interesting chat.
Yeah, and Jordan's coming from an interesting perspective as well, having just essentially sold his company to a $5 billion international metaverse company. So he's in a perfect position to be describing all that to us. It was a fascinating chat. It is up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you, Michael.
It's Thursday, the 21st of April, 2022. Make sure you're following the podcast. Join us online on LinkedIn, Twitter, and Facebook. And don't forget to check out the latest episode of Safe Word by Fear and Greed that is available right now. I'm Michael Thompson, and that was Fear and Greed. Have a great day.